Hi viewers, welcome to the Momentum Move video series. Myself Brijesh Bhattaya, Senior Research Analyst and Editor at Equity Master. So if you remember in the start of March, we have highlighted that markets might go into time correction and we are witnessing markets been in the whole month of March. It's been trending in a range, though slightly we have indicated the range might be bigger 14,400, 15,400, and still we gone a dip towards 14,264, but in the end still holding on to 14,500 levels. So still a time correction has been happening into the markets, and the whole whole March, we have seen markets been consolidating in a range. What to look forward now? If we look at the March expiry on expiry has been slightly on a negative side. But if I just look at the April expiry on expiry, the stats has been very interesting. Why am I saying that expiry to expiry? Because generally, as we are into the financial year end and the last expiry, generally March expiry, the leverage positions go on to the downside, and as soon as the first April starts, the leverage position starts building up. Hence, we have seen most of the leverage position ending onto the March side by the retails and DIIs. So overall, if you look at the stats for April, has been very fantastic for bulls, and it should really excite you if you are a bulls over here. So if I just look at the last 17 years of data, expiry on expiry, it's been 13 for the bulls and 4 for the bears, and average return has been around 3.4%, which is again a big number for Nifty. Even if I look at the month on month, the seasonality analysis for the month of April on Nifty, it's been again a fantastic with 3.19% gain for the month of April. And historically, we have seen that bears has been generally acting morely into the March, and since April starts, bulls are coming back very strongly. Historically, the April is for bulls, and we believe that yes, it could be the possibility into 2021 as well. But you might be surprised that we have ended March at the lowest level of around 14,325 levels. The low was around 14,264, so nearly the monthly low on expiry, and still I am indicating that that could be the one where bulls could see in the month of April 2021. And I believe that that could be the bear trap happen with the expiry ending. But if you look at the first week of April, first day of April series, and again Fridays are coming to the rescue of bulls. This Friday also we witness a gap up opening, markets reclaiming back towards 14,500 levels on the Friday. But if you look at the structure of Nifty, we have formed lower high, lower low structure, and many might be excited that the bears are taking the leads over here. But when I believe that that's not the case so far, and this could be the bear trap. So if you look at the first chart over here, the weekly chart of the Nifty over here, and we have seen the trend line broken down. And again, at the first sight, at the glance, this chart would be exciting the bears, and bears would be thinking that I should just go look at this chart, go and short the markets. Yes, if you look at the two things for bears over here, first the trendline breakdown has happened. Second, the bearish engulfing has happened. The same structure has happened in Jan 2020, and history. March 2020, we saw a big dip onto the markets. But yes, over here at current point of time, why I'm indicating that this could be the better, because if you look at the lower panel over here, the RSI, it's still trending into the bullish zone above 60 mark. And whenever we have seen that markets are trending on the higher side, RSI sustaining above 60, the bulls rally resumes. And if I just go to the lower time frame, slightly lower from weekly to daily, the top down approach, and if I look at the daily chart over here, three things. First, the gap area of start of the Feb, 14,330, 14,469 has been filled. We have seen markets taking support over there. Friday, the weekly close back towards 14,500 above those. Second, if I look at the Bollinger Band over here, basically the Bollinger Band I have taken a 20-day average and plus and to minus standard deviation. And if I just look at this band, prices are sustaining below at the lower band of the Bollinger Band levels, and we have seen that again the momentum have slightly picked towards the bullish side. So with the price taking the gap support, RSI on the lower panel again back towards 40, and the slope has now towards northwards. And Bollinger Band, the prices are taking support at the same level. So we think that this will really act as a major support, and the confluence of support zone over here is slightly exciting me to go long because the risks are favorable over here, and the lows which were made out of 14,264 till those are not broken. I think that this could be the bad trap, and we might see the bullish scenario coming back to the markets. Now, to just confirm or to look at the other indices, as we know that Dow Jones has been trending at the all-time high, the other European markets are also trending good on the bullish side. But I just went on to the look at the Asian indices because Asia again, we know that most of the money flows are happening into the Indian markets. India being one of the best investment avenues for the FIIs and FDIs. I just want to know some of the Asian indices. So let's start with the Nikkei first, the Japanese indices. And if you look at the Nikkei over the similar structure of Nifty, the rising trend line has been held very strongly over here. Plus, if I just look at again the RSI, the similar structure, it's been trending very strong above 60 mark. It is again showing the sign of bullish momentum over here. So the structure of rising trend line, markets taking support at the trend line, ending the week on the positive narrative, not on the positive side, but the reversal from the lows has been very strong for Nikkei as well as we have seen due to the Nifty. Plus RSI, the similar structure what Nifty is showing, the bullish, it's into the bullish zone as of now. The second indice I want to discuss is Kospi. And again, this is one of the best indices I think should be a point of investment. So why I think? First, look at the weekly chart over here. And if I just look at the weekly chart, again, the rising trend at the similar structure, what we have seen on Nifty, what we have seen on Nikkei, has been held very strongly. But if you look at the small, narrow, the triangles, both the confluence of supports are playing at the same level. And this is very much exciting for me. Second, if I just look at the lower RSI again into the bullish scenario on the weekly scale. Now, let me show you one chart you should remember for next few years to come, not the few weeks, but few years to come. This is the Kospi monthly chart. And if I just look at the Kospi monthly chart, it has broken out of the multi-year trend line. So 2007 highs, 2011 highs, 2018 highs. When I've just connected the trend line from these highs, the prices have broken above these trend line, and generally such scenarios are rare to be seen in both the weekly and monthly charts. And when we are seeing it on the monthly chart, I think the fresh bull run, the multi-year bull run is starting for Kospi, and I think this could be the one of the best investment avenue you should look at into the Kospi. Though I'm not aware of much of the stocks into those, but you can dig it out and look for an investment avenues over there. But this, I think, for next few years to come, or probably 2024 2025, this could be the best performer coming on for the next 4 5 years onto the Kospi. So you should clearly have a focus on Kospi, and I think this is could be the best investment you can make. Again, as I said, I don't know much of the stocks, but you can just dig it out. The next is the Shanghai over here, and Shanghai is one of the most underperforming. If you look at the most of the Asian indices, this has underperformed by May margin. And this is the one chart where the rising trend line broke down has happened, and it has gone down to test the 200 days average over here. Now, why have highlighted this chart over here? Because I want to show that the prices here, the indices over here, is taking the support at 200 days average, and not once, they twice it has taken the support over here and is showing the sign of upward trajectory momentum. Now, if you look at the same structure, if the prices go continue with the positive, we are at around 3420, 3430, and if these break out about 3500 level on the upside, which is the recent highs of around 3 4 something 90, I'm just taking a cushion of around 10 15 points and look at 3500 as a key psychological level as well. If Shanghai moves above 3500 levels now, it will form a major double bottom structure, and double bottom right at 200 days moving average. So I think this possibility, if the 3500 is breached, we might see 3750, 3800 levels taking on to the upside momentum on the Shanghai as well. And the other indices also might see a strong upward momentum, a resumption of upward momentum. So just to conclude, the Nifty, I think 14,200, if 200 to 50 is not breached, this could be the bear trap which had happened. Yet the confirmation can be the recent high which was around 14,878. Once these levels is breached, we might see the lower high lower low structure being breached, and the upward journey could confirm. Plus the RSI, the strength is still into the bull's court, and prices are trading at crucial support zone. Being a truncated week next, we have 3 trading days: Tuesday, Wednesday, and Thursday. uh, Probably we might see some range bound continuing into the next week, and but till the 14,200 14,000 is not breached on the downside, don't look for bear momentum. Only these levels are breached, we think the bearish momentum could continue. Otherwise this could turn out to be the bear trap, and the rally post bear trap could be the fast and furious towards the above the 15,000 level mark. So keep a watch on those levels. Plus, if you look at again, the Asian indices are still into the positive zone, Dow Jones into the positive zone. We think that a post time correction, we might see the positive momentum continuing into the Nifty, and we are very much bullish on the market till 14,200, 14,250 is not break. And again, as an investor, you should again look for cherry pick stocks, and we have already highlighted small caps is the one we have been watching out very strongly on every day. There's an opportunity. You can watch our videos which where we have covered small cap indices, and we are very much bullish on small cap indices for 2021. So keep a watch on those stocks, and again I would say cherry pick those stocks which are strongly outperforming. So before signing off, I would request click onto the subscribe button and do comment how do you feel our videos are. Thank you, Brijesh Bhatia. Do not forget to subscribe to my email newsletters, Fast Profits Daily, and get a free guide on how to trade markets like pro. Thank you.